Something unusual just happened in the silver market today. And if you missed it, you might already be behind. In just a matter of hours, silver prices suddenly surged between 5 to 7%, catching both retail traders and even experienced investors off guard. Just days ago, the same market was falling hard, dropping nearly 10% and shaking confidence across the board. And now, almost instantly, we're seeing a sharp recovery that's raising one big question. Is this the bidite of the next major bull run in silver? Or is this just another trap before a deeper scoot? Because here's the truth. Moments like this don't happen randomly. When a market crashes and then spikes this aggressively, something bigger is going on beneath the surface. And if you understand what's happening right now, you could position yourself ahead of the next major move. Let's break this down. Right now, silver is trading roughly between $72 and $77 per ounce. That's a massive move when you consider where the market was just a few days ago. The sudden spike today didn't come out of nowhere. It was triggered by a combination of geopolitical shifts, changing expectations around interest rates, and a subtle shift in investor sentiment. One of the biggest drivers behind today's move is easing geopolitical tension, particularly related to the Middle East situation. Whenever global tensions start to calm down, markets react quickly, and precious metals like silver and gold often move sharply. But here's where it gets interesting. Normally, easing tensions would reduce safe haven demand. So why did silver go up instead of down? This is where most people get confused, and where smart money starts paying attention. Because silver is not just a safe haven asset, it's also an industrial metal. That means it reacts not only to fear, but also to expectations of economic growth. When tensions ease, markets start to price in stronger industrial demand, especially from sectors like solar energy, electronics, and manufacturing. And silver sits right at the center of that demand. So what we're seeing right now is a shift in narrative. Just days ago, the market was pricing in fear. Now it's starting to price in recovery. But that's not the only factor. Another major driver is the uncertainty around U.S. Federal Reserve policy. Interest rates have been one of the biggest pressures on silver over the past year. When rates stay high, non-yielding assets like silver tend to struggle. But now, there's growing speculation that the Fed may slow down or even reverse its tightening stance in the coming months. And that changes everything. Because when rate cuts enter the conversation, liquidity starts coming back into the market. And historically, that's when precious metals begin their strongest rallies. At the same time, the US dollar has shown signs of weakness. And since silver is priced in dollars, a weaker dollar typically pushes silver prices higher. It makes the metal cheaper for international buyers, increasing demand and driving prices up. So now you have three powerful forces aligning at the same time: easing geopolitical risk, shifting expectations around interest rates, and a softer dollar. That combination alone is enough to explain today's spike. But here's the bigger question. Does this mean the bull run has officially started? To answer that, we need to look deeper. Because markets don't move in straight lines. And what often looks like the start of a rally can sometimes be nothing more than a temporary bounce. Let's talk about what just happened over the past week. Silver dropped nearly 10% in a very short time. That kind of move shakes out weak hands, it creates panic, it forces retail investors to sell at the worst possible moment. And right after that, the market reverses sharply. This pattern is not new. It's one of the oldest moves in the market. A sharp scoot followed by a sudden spike often signals one thing: accumulation. In simple terms, it suggests that larger players may be using volatility to build positions while smaller traders get pushed out. And if that's true, then what we're seeing right now could be the early stage of a much bigger move. But we still need confirmation. From a technical perspective, there are two levels you need to watch very closely. On the downside, the key support level is around $70. If silver falls below that level again, it could signal that the market is still weak and that today's rally was just a temporary reaction. On the upside, the major resistance zone sits between $77 and $80. This is where things get really interesting. If silver can break above this range and hold it, that would be a strong signal that momentum is building and that buyers are stepping in aggressively. And if that happens, the next targets could quickly move toward 85, 90, or even higher. But if the price gets rejected at this level, we could see another pullback before any real upward trend begins. This is why the current moment is so critical, because we are literally at a decision point in the market. Now let's talk about the bigger picture. Over the past year, silver has already delivered massive gains, rising more than 100% from its previous lows. That kind of move doesn't happen without strong underlying demand. And despite the recent volatility, the long-term fundamentals for silver remain very strong. One of the biggest drivers is the global push toward renewable energy. Solar panels in particular require significant amounts of silver. As countries continue investing in clean energy, demand for silver is expected to increase significantly over the coming years. At the same time, supply constraints are becoming a growing concern. Mining output hasn't kept up with rising demand, creating a potential imbalance that could push prices even higher over the long term. So fundamentally, the case for silver is still very strong. But markets don't move based on fundamentals alone. They move based on timing, sentiment, and positioning. And right now, sentiment is mixed. Some investors believe this is the start of the next big rally. Others think it's just a temporary bounce in a volatile market. And that uncertainty is exactly what creates opportunity, because the biggest moves in the market usually happen when most people are unsure. Now let's break down the possible scenarios from here. In a bullish scenario, silver manages to break above the $77 to $80 resistance zone. This breakout attracts more buyers, momentum builds, and prices start moving toward $85 or even $90 in the coming weeks. If macro conditions remain supportive, especially if the Fed signals rate cuts and the dollar continues to weaken, this could evolve into a full-scale bull run. In this case, today's spike would be remembered as the starting point of the next major upward move, but there's also a bearish scenario. If silver fails to break resistance and starts losing momentum, we could see another drop back toward $70 or even lower. This would suggest that the market is still in a consolidation phase and that more time is needed before any sustained rally can begin. In this case, today's move would turn out to be a classic bull trap, a temporary rally that pulls buyers in before the market moves lower again. And this is where things get tricky, because both scenarios are possible right now. And that's why smart investors don't just react to price. They wait for confirmation. They watch how the market behaves at key levels. They pay attention to volume, momentum, and macro signals. And most importantly, they don't let emotions drive their decisions. Because in volatile markets like this, emotions can be your biggest enemy. Fear makes you sell at the bottom. Greed makes you buy at the top. And confusion keeps you stuck in the middle. But clarity comes from understanding the bigger picture. And right now, the bigger picture tells us one thing. Silver is preparing for a major move. The only question is which direction it will choose. So what should you be watching right now? Keep an eye on the resistance zone around $77 to $80. A strong breakout above this level could signal the beginning of a new trend. Watch the support around $70. If that level breaks, it could mean more downside is coming. Pay attention to Federal Reserve signals. Any indication of rate cuts could push silver higher, and monitor the US dollar. Continued weakness in the dollar would support further gains in silver. Because at the end of the day, the silver market doesn't move randomly. It moves based on a combination of factors. And right now, those factors are starting to align. Which brings us back to the original question. Is silver entering the next bull run after today's spike? The honest answer is we are very close to finding out. The conditions are there, the momentum is building, but confirmation is still needed. And that's what makes this moment so important, because the next few moves in the market could define the trend for the rest of the year. So whether you're an investor, a trader, or just someone watching from the sidelines, this is a market you don't want to ignore. Because opportunities like this don't come often, and when they do, they move fast. Now I want to hear from you. Do you think this is the start of the next big silver bull run, or just another fake rally before a drop? Let me know in the comments. And if you found this analysis helpful, make sure to like the video, subscribe to the channel, and stay tuned, because the next move in silver could be bigger than anyone.